Hi Atul, how are you?
I'm good. How are you? Jai Shri Ram.
Jai Shri Ram.
I've been on I was on listen only mode, and I must really compliment you that the I think the next last 10 minutes what I heard was so wonderful to hear. Uh,
Ah, thank you.
Really amazing. Like highly appreciated.
Thank you so much. Thank you so much. We do these kind of sessions regularly with our members across the country, MFDs. And every
Yeah.
Saturday for the last 4 years, we have been doing these kind of events. And yeah, so far so good. So this is what I believe in. This is what other MFDs believe in. So this is it. So how is life, Atul? And what is up?
Life is good. It's great. And so just moving to the mutual fund world. So I've been part of the alternates world for a long time, and it's a transition to the mutual fund world. So for the last 3 weeks, I've been on the road meeting people for marketing. So I've been to start with Bombay, then Delhi, then Bangalore, then Calcutta, then Pune, and next week I'll be in Ahmedabad.
Oh,
So I think it's been great learning, like being on the ground, meeting people. Because I think the most important thing when you're a manufacturer, the most important thing is to understand your customer, right? Because end of the day, it is the alignment of expectations that keeps the relationship long, right? So if I manufacture something and it's not aligned to the customer's requirements, it is of no use, irrespective of how good it is. So my learning over the years has been that you manufacture what is suited to the customer, and you manufacture, like you said, in terms of like you were mentioning that treat your clients as your children, as your parents. Like I have all my money in my own mutual funds, and my like so far, like when I was managing alternates, I had all my money, my family money, in my own PMS and AIF products that I was managing. And now that I've moved to the mutual fund, I have redeemed those investments, and I'll be putting it in the mutual fund that I will manage myself. So my family is my client as well.
lovely.
So so that's something.
So first thing first, I mean, and I will ask you straight, from the heart, and जो स्प्राइट का ऐड आता है ना, सीधी बात, नो बकवास, मार्केट सस्ते हैं कि महंगे हैं अतुल?
मार्केट इज ऑन द अपर एंड ऑफ द रेंज. जो प्री मल्टीपल अगर आप देखोगे लास्ट 20-25 साल का, लो ऑफ द मार्केट इज 10p, हाई ऑफ द मार्केट इज 25p. टुडे वी आर अबाउट 22p. सो मार्केट पी मल्टीपल के बेसिस पे सर देखेंगे तो इट इज ऑन द हायर एंड ऑफ द रेंज. बट वन थिंग आई वांट टू ऐड इज, if you're a long term investor, the more important thing is earnings growth and return on equity, right? क्योंकि पी मल्टीपल 20 आज है, 10 साल के बाद भी 20 के लगभग ही होगा, राइट? बट इन दिस 10 year period, if your earnings growth is 15%, the returns that you will make is 15%,
करेक्ट.
right? Because पी मल्टीपल लॉन्ग टर्म में उतना इम्पैक्ट नहीं करता है. Broadly, if you're around the averages, it is okay. But in the long term, if you look at any stock, Infosys आप देख लीजिए. Infosys, for the last 30 years, since the time they came up with their IPO, मार्केट कैप इन्फोसिस का 30 करोड़ था आईपीओ के टाइम पे. आज उसका मार्केट कैप 6.5 लाख करोड़ है. तो इन्फोसिस इज अप 20,000 times in terms of market cap in the last 30 years since its IPO, right? Now the reason is कि उसका प्रॉफिट हुआ है 20,000 में. 1 करोड़ का प्रॉफिट था, अभी 20,000 करोड़ का प्रॉफिट है.
Oh, lovely. This is lovely correlation. Yeah.
So end of the day, if you want return, end of the day, it is all linked to earnings growth. And the earnings growth outlook is fairly stable from a medium to long term perspective. And another angle I also want to talk about is कि normally when do you pay high P multiple for a company? The reason why you pay high P multiple is because your expectation from the company is good, right? आपका expectation है कि ये कंपनी अच्छा करेगा, right? ये कंपनी अच्छा है और ये कंपनी अच्छा करेगा in terms of ROE and in terms of return on equity, in terms of ROE and in terms of earnings growth. Because your expectation is कि ये कंपनी अच्छा करेगा, इसके लिए you have bid up the price, right? कि आप नहीं तो 10p में लेते तो कोई एकदम बहुत ऑर्डिनरी कंपनी तो आप उसको 10p से ज्यादा नहीं देंगे, राइट? लेकिन आप 25p किसको देते हैं? उसको देते हैं जहां आपको एक्सपेक्टेड है कि ये लंबा चलेगा. लाइक इफ यू लुक एट डीमार्ट, डीमार्ट का 100p है, right? Some of it is exaggerated, but point is कि the market in its wisdom, it is giving its high P because expectation is कि ये company बहुत बड़ा होगा अगले 10-20 साल में और 20% ROE है and company is doing well. So 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 that is the thinking that broadly market is a little bit on the higher side, but जब तक earnings growth है, जब तक ROE है, it's not too much of an issue. Especially the large cap sense of the market is much more reasonable than the mid and small cap at this point.
I agree with you, and because numbers say that, and also because you're coming out with a large cap NFO, and that means that you believe that large caps are still valued reasonably well. My question, Atul Bhatt here, and I want to ask you a question with MFDs wants to really understand and have answers from you. You know, when the markets fall, the fund
Yeah.
managers or the MCs will say market was looking expensive. Now, when will markets fall? At what levels? What are the, it's simply from the perspective of valuations, not from, global factors or geopolitical or, any event kind of risk, because that
Mhm.
can happen anytime. So you say that large caps are reasonably valued. What is the level where you will be worried about large caps?
So, like I was mentioning, Brijesh bhai, basically, if you look at valuations for large cap, they are like 22, 23 times P multiple on trailing basis, right? So, so basically, if you do a reciprocal of 22, 20, 20, suppose it's 20 times. So reciprocal of 20 is 5% आपका yield है, right? एक
Correct.
100 रुपए का आप शेयर खरीद रहे हो, बेसिकली उस पे आप 5 रुपए आप बना रहे हो. That is the earnings yield
Yeah,
of the index today. Now, if you look at the 10 years GSEC is about 7%, correct? So basically, in the medium to long term, if you hold a fixed income instrument like GSEC, तो आप अगले 30 साल तक आप 7% बनाओगे.
correct.
Right? Here, if you're making 15% return on equity, and
Year on
if
year
you're
basis.
growing at 12 to 15, in the medium term, basically you will end up making, उसमें 2% आप subtract कर दो, जो 5 और 7 का जो difference है between GSEC and
Correct.
and market, उसको आप even कर दो. तो अगर earnings growth 15 होगा तो आप 13 बनाओगे, earnings growth 12 होगा तो आप 10 बनाओगे, right? So broadly, if you look at the difference between earnings yield and GSEC yield, which is a broad barometer of valuation, whenever like earnings yield is more than GSEC yield, वो तो मतलब market एकदम सस्ता है, right? Because you have a growth business which is available at a valuation which is less than a no growth business, which is like 6-7% growth. Bond is always growing at 7%, but business can grow at 10 to 15%. So so broadly 20 पी पे ऐसा कोई 20-22 पी पे ऐसा कोई खास ओवर वैल्यूएशन नहीं है, as long as you are confident on the earnings growth, because the P multiple that you give is based on an expectation of earnings growth, right? So मेरे हिसाब से 20-22 P multiple पे it's not that it is very overvalued, broadly on the upper range, but it's not like crazily overvalued in any sense.
So,
So
my follow-up question is that the international markets, the valuations are quite low, 10, 12 kind of thing. Is that the reason because the growth potential of those companies is not as good as India?
So, sir, let's look at, say, India itself from that perspective. If you look at any commodity company within India, right? If you look at a metal company, for
Yeah,
example, उसी का P multiple 6, 7, 8 होता है, right? Or if you look at a company like DMart, उसका P multiple 100 होता है. तो इंडिया के अंदर ही अगर आप देखेंगे, तो there is a wide range of P multiple from single digit P multiple to triple digit P multiple, right? So the reason is again that what is your long term return on equity outlook? What is the long term growth outlook, right? Now, similarly, when you compare countries, right, there is country में एक और एंगल आ जाता है, which is geopolitics,
correct.
right? कि आपका क्या leadership है, क्या thinking है. Now, irrespective of how cheap Russia is, people, whoever are foreign investors in Russia, they all sold equities on day one of the war, right? Because आपको नहीं झेलना है. You don't want to be involved in that business at all in a country which is in terms of in the stage that it got onto with Ukraine and so on. Similarly, what you're seeing in China, right? आपका टॉप डाउन व्यू है कि ये कंपनी ये कंट्री में ही पैसा नहीं डाल, राइट? बिकॉज ये कंट्री का क्या होने वाला है पता नहीं, राइट? सो आपने टॉप डाउन व्यू ले लिया कि इसमें हमको इन्वेस्ट नहीं करना. सो whenever there is very high in terms of top down view, you will see a valuation differential, right, to be there. And additionally, the index of every country is composed differently, right? तो हमारा खुद का अगर आप इंडेक्स देखेंगे तो हमारे इंडेक्स में पी मल्टीपल कम वाले कंपनीज हैं, जैसे काफी ज्यादा जो मेटल कंपनीज है उसके बहुत पी मल्टीपल कम है, और जो कंज्यूमर कंपनी है उसका पी मल्टीपल हाई है, राइट? Similarly, you need to compare when you're comparing two countries. You need to see what is the composition of the index in terms of various sectors and quality of businesses. तो अगर जैसे lot of say Brazil for example is a very commodity driven country, right? So as against that, if you look at India, we have consumer businesses, we have technology businesses, we have and manufacturing businesses. We have a wide range of businesses in India, right? So whenever you're making country comparisons in terms of crude P multiple, right, it may or may not give you the right picture because uh, basically आप it's like आप दो मील बॉक्स खरीद रहे हो, राइट? एक मील बॉक्स में आपको चावल दाल गुलाब जामुन सब है, और एक दूसरे में आप कुछ और खरीद रहे हो, राइट? सो ऑल्दो बोथ आर मील बॉक्सेस बट दे विल बी वेरी डिफरेंट इन देयर कंपोजिशन. So these are the two things that you look at from a country perspective. Additionally, also what is happening is in terms of flows is a big angle, right? So like even India, if you look at it, what has happened is last 3 साल में FII का selling हुआ है इंडिया में. FIIs have sold 50,000 crores of equities in India because they are investors who have access to 100 countries globally. तो उसको जहाँ पैसा अच्छा लगता है, जहाँ पैसा बनेगा वो वहाँ इन्वेस्ट करता है. As against that, if you look at domestic investors, हमारे पास क्या ऑप्शन है? हम या तो एफडी कर सकते हैं, या तो हम शेयर बाजार में पैसा लगा सकते हैं, या तो हम म्यूचुअल फंड खरीद सकते हैं. RBI is now restricted in terms of foreign investments by mutual funds, right? So you can't buy foreign stocks. You have to only buy Indian stocks, right? You can do a little bit of LRS वगैरह, but that is too complicated for majority of the country people. So hence, last 3 years in India, you have seen 6 lakh crores of flows from the domestic investors, right? So that again has contributed to like some part of the market being in an extreme zone, right? But the nature of the market says कि अभी आप देखोगे अगले 12-18 महीने में 2-3 लाख करोड़ का IPO आ जाएगा, right? Some of the private equity sellers who hold companies in the listed space, they will sell. So in the medium to long term, things tend to balance out because end of the day, if there is any kind of overvaluation in any pocket, there will be somebody who will come and encash it. Private equity share बेचेगा, promoter share बेच देगा, or you will have new IPO, new issues also come to the market. So market has its own leveling mechanism. Excesses in some pockets should get corrected from that perspective. So
Atul, why large cap? I mean, MFDs के perspective से, they find large cap as a competitor to index fund, and they don't want to sell index fund, and they want to go for flexi, mid, small sector funds because it's very difficult, first of all, for FM fund managers to beat large cap with the index. So, क्या story क्या है large cap में? Why not an index fund? Why a large cap? How will you beat index?
right. So can I showcase a couple of slides I want to talk about?
Yeah, please.
Yeah. So the biggest question in the industry is that only, ki why a active large cap fund? Why not passive? Why not index fund? Right. So we want to talk about a few things of why we believe an active fund is, and especially our large cap active fund makes sense. So let me give you some context. Basically, अगर आप देखेंगे जो large cap category of mutual funds है इंडिया में, there are 30 funds who are existing in the category. And there is 2,80,000 crores of AUM that these 30 funds manage. Now, if you do a further drill down, you will find and observe that of the 2,80,000 crores, 2,60,000 crores is with the top 10 funds in the category, right? So 95% of the AUM is with the top 10 funds. The largest fund in the category is having a 50,000 crores AUM, right? So it is very, very concentrated in the few funds, and the funds that are there who are very large size funds. Now, typically the way it works is that large funds, they have over a period of time become closet indexers, right? So what they're doing is they are having 60% of the portfolio common as the benchmark, and the active share for them is only 40%, right? So which means that you're playing the game only to the extent of 40%. 60% तो आपने index को match कर दिया, right? So hence they are finding it difficult to beat the benchmark, right? So if you look at the data points, the best performing fund in the large cap category on a 10-year basis has delivered 2% alpha, right? And the largest fund in the category in the last 10 years has delivered 1% alpha. So that is how, because you're closed indexing, your returns are more or less like the index, right? So why Motilal Oswal large cap fund? So we are the 31st entrant in the category. So what are we bringing? What are we bringing? Why do we need to exist in the first place, right? So we have come up with a framework which we are calling ACE, which is high active share, high conviction, equal weight portfolio. So what are we saying? Basically, we are saying कि अगर आप देखेंगे index is 100% passive, which means the active share for index is 0%. The peers, the top 10 peers, which manage 94% of the industry AUM in the category, they have an active share of only 40%. 60% of the portfolio is common as the benchmark. We want to build a portfolio which is having a 60 to 80% active share, which means the product and the fund will be truly different than the benchmark. So that is the first key pillar why we will be having a very differentiated offer. Second is if you look at conviction, the index has 100 stocks. The peers on an average have 58 stocks. We want to build a fund which is a 30 stock portfolio. So our house DNA is conviction, and we want to build a portfolio which is of 30 stocks. So that is the second major point. Third is that if you look at the index, it is very, very top heavy. Right? Let me show you this chart. Basically, the top weight in the index is 11.3. Top 3 weights in the index is 25.3 and top 10 is 48.5. तो 100 स्टॉक का इंडेक्स है, लेकिन आपने आधा पैसा 10 नाम में लगा दिया और बाकी आधा पैसा आपने 90 नाम में लगाया, राइट? So what is happening is the index is very, very top heavy. आपने you have bet a large portion of the portfolio in the top in terms of names itself, right? So the other thing is so this combination, in our opinion, will so high active share and high conviction should help us deliver alpha, and equal weight will help us deliver consistency. So our goal while running the fund is consistent outperformance. Right now, coming to the second question, ki large cap mein alpha hai ki nahi, right? So we have done this data analysis for the last 20 years. And what we see is that in the top 100 names, if you look at the top quartile performers, right? So 100 stocks ka index hai, Nifty 100, which is the benchmark for large cap funds. So the top quartile performers within the index on 5, 10, 15, 20-year basis have generated 60% alpha. So the top 25 performers have given you 75% return versus 16% for the benchmark, which translates to 60% alpha, right? So basically, if you look at this data, and it is not across 1 year, it is 5, 10, 15, 20 years across the board, every time you've seen the top quartile generate minimum 50% alpha, right? So it is not that there is no alpha which is available. There is alpha which is available. But the way the current mutual funds are managed in the large cap space, they are closed indexers, right? So because if you close it index, you will not be able to generate alpha. What we want to do in the fund is we want to have a high active share, high conviction, equal weight portfolio. The combination of the three will help us, in our opinion, deliver alpha and deliver alpha on a consistent basis.
So I have a question here. What do you mean by equal weighted? You mean to say that you will have 30 stock with 3.3% holding on all 30 stocks?
Exactly. That is what we mean. So basically, I want to show you some more data regarding this. If you look at the Nifty 100 index itself, over the last 20 years, the index is up 29 times, right? But if you had bought all the Nifty 100 constituents in equal proportion, which is the Nifty 100 equal weight index, your money would have multiplied by 37 times in the last 20 years, right? So even if you are even if you're building a portfolio passively on an equal weight basis, it is outperforming the portfolio which is market cap basis. So why is this happening? The reason, in our opinion, why this is happening is क्या होता है सर कि अगर जब कोई कंपनी मिड कैप से लार्ज कैप बनता है तो इनिशियली इट्स रैंक इज 100, right, in the top 100 companies. Now the way the index works is it is basis free float market cap. So the weight for a stock in an index is decided on the basis of free float market cap. So HDFC Bank, which has the highest free float market cap because it doesn't have a promoter. So all the market cap of HDFC Bank is free float market cap, right? तो उसका आपने 13 लाख करोड़ का फ्री फ्लोट मार्केट कैप पकड़ लिया और जो नया एंट्रेंट है इसका 70,000 करोड़ मार्केट कैप है, प्रमोटर ओन 75%. तो आपको खाली 25% ऑफ 70,000, तो 7 2 14, 17,500 करोड़ का आपका फ्री फ्लोट मार्केट कैप है। तो लार्जेस्ट कंपनी का 13 लाख करोड़ फ्री फ्लोट है, और छोटा सबसे सबसे छोटा कंपनी जो अभी बड़ा है लार्ज कैप, उसका 13,000 करोड़ 17,000 करोड़ का फ्री फ्लोट है। So which means that HDFC Bank has 11.5% weight in the index, and this company has 0.10% weight in the index. Now, this company is doing well. That's why it has become a large cap from a mid cap. It continues to do well. So initially उसका रैंक 100 है, फिर उसका रैंक होगा 60, फिर उसका रैंक होगा 30, राइट। बट जब उसका रैंक 100 से 30 होगा तो ये स्टॉक हो जाएगा 10 गुना, राइट। 70,000 करोड़ से उसका मार्केट कैप होगा जाएगा 7 लाख करोड़, राइट। Now the index, the way index works is index doesn't use a brain. इंडेक्स बोलता है फ्री फ्लोट मार्केट कैप। आप प्रमोटर जो भी हो डजेंट मैटर, आप सीईओ जो भी हो डजेंट मैटर, आपका अर्निंग्स ग्रोथ है कि नहीं है डजेंट मैटर, अर्निंग्स है कि नहीं वो डजेंट मैटर, वैल्यूएशन क्या है डजेंट मैटर। इंडेक्स डजंट यूज इट्स ब्रेन, इंडेक्स बाइज yesterday's winners, right? But this company, if you are able to choose, right, and allocate money to this company, you have a 10 bagger within a large cap, right?
So you mean to say essentially that you are buying the small caps or the mid caps or the large cap to outperform within the
So
large
what
cap
I'm
category?
saying is at the index level, the equal weight
Index
is
level.
working. Equal weight is working on even on a passive basis in the index, because the smaller companies in the index are doing better than the larger companies in the index. Not larger, like free float market cap. The
I
larger
understand.
weights,
Ma-
the smaller weights in the index are doing better than the larger weights in the index.
I have a question here, Atul, and I just want to clear my doubt. Uh, if if you have decided that it will be an equal weight index, then what is the role of the fund manager in this entire
Right.
exercise?
So basically, what we are saying is twofold. We are saying that we want to build a portfolio which is an active fund. 100 companies में से we want to identify the top quartile 25 companies of the large 100 companies and have them in equal proportion. So we are not buying 100 stocks. We are buying 25 of the 100, which in our opinion will be the best performing stocks.
But that is a one-time strategy. What next?
No, it is not a one-time strategy. It is an everyday strategy. क्योंकि कोई कंपनी का अगर रिजल्ट खराब है, you need to replace. अगर आपको आउटलुक फ्यूचर का चेंज होता है तो यू नीड टू रिप्लेस।
Okay.
अगर कोई सीईओ रिजाइन करता है उसको यू आपको रिप्लेस करना। सो आपको 25 कंपनी चुनना है जो आपके हिसाब से टॉप क्वार्टाइल परफॉर्मर्स का पोटेंशियल रखते हैं, राइट। एंड यू हैव टू आस्क दैट क्वेश्चन एवरी टाइम वेदर दिस कंपनी इज अ टॉप क्वार्टाइल परफॉर्मर, राइट। इन द फ्यूचर, पास्ट नहीं, पास्ट तो हो गया।
So if I understand correctly, the job here is that on a daily basis, you want to identify the 25 stocks in which you want to invest, and then that has equal weightage. On a daily basis, you are managing the equal weight. And whenever you have to change, which probably every year you will change 3, 4, 5 stocks in the entire year, that is the strategy.
So equal weight, what we are doing is we are on 1st of January, we are identifying, in our opinion, which are the 25 of the 100 companies which have the potential to do well in the next 12 to 18 months time. And we build a portfolio of that, of 25 companies from the large cap space, the balance 15 to 20%. So large cap fund can invest 80% in large caps, balance 20%, we have discretion to buy anything that we like. So there we will have our highest conviction, mid cap, small cap ideas. We can do IPO, pre-IPO, foreign equity. So there we have the full flexibility, which is an added source of alpha at the fund level, right? Now, say 1st of Jan को हमने ये portfolio बना दिया of 30 stocks, which are equal weight in proportion. Now, if there is no need to change, we do not have any trades in the portfolio for 1 year, right? We just let our winners ride. We let our portfolio run as it is. Now, but there will be times during the year where there is a reason to change, right? कोई company का outlook change हो रहा है future का, based on a quarterly result, based on a management change, based on some global event or whatever it may be, or maybe वो stock बहुत महंगा हो गया अभी, stock is up 50% and it is very expensive, right? So depending on various reasons during the year, we will relook at our portfolio names and change if there is a need to change, right? But in the absence of any particular event or anything of that sort, we just want to buy and hold from a 1 year perspective. At the end of the year, we will have a fresh relook, and if there is a need to change, we will change again. So that is the portfolio that we want to build. So, and it will have all these three components. So basically, high active share, high conviction, 30 stock portfolio, and equal weight. So with this, we aim to derive outperformance and uh, and consistency in outperformance.
Interesting, very interesting. And I think this is very, very interesting that you are mixing up a simple index-based strategy of equal weight to the top 25 stock identification, and then you have around 20% possibility of small cap, mid cap, and that can derive alpha. So friends, if you have any question, please raise your hand, a couple of people, or maybe you can write in the chat box while I have a couple of questions which I will ask. You know, Atul, why this strategy in the large cap space? Why can't it be in a flexi cap or some other name? Why it has to be large cap?
So, so it is. It can be applied in multiple ways. It's not that it is. It can only be applied in large cap space. But just to be frank, like say, so far, like let me give you like some context of the evolution and so on and so forth. So basically, this has been my experience in running the funds. So I was running funds on the alternate side so far, right? So I was managing about 3,500 crores of capital on the PMS and AIF side. And like I told you earlier, like all my money, personal investing was in the same funds that I was managing. And my journey in the stock market has began very early in life. So I have been an investor since I was 13 years old. So, having observed, being a personal investor right from childhood, managing money on the alternate side for the last few years, and over 15 years of professional experience, like for the last 15 years, um, I was given the opportunity from my firm to basically manage the large cap fund because we believe that large caps is an opportunity for the market at this point in time. So when I was given the opportunity, I took it from the perspective that I believe there is a room for differentiation. I believe there's a room for trading alpha on the large cap side. And the category, if you look at it, most of the most of the funds are run as index funds in the category. So if you look at this particular framework that we have, right, this is taking into account the need of the category. Like the category needs a fresh perspective. It needs a difference in terms of differentiation in terms of fund management. And it's also the equal weight helps from the perspective that we want to derive consistent alpha in the fund. We don't just want to derive alpha. We want to derive consistent alpha because we understand, like I was telling you, British by earlier, that in a lot of these interactions that we've had with investors and so on and so forth, and with multiple distributors, we understand that what is the role of large cap fund in a investor portfolio. The role of large cap fund in the investor portfolio is being stability and in terms of deriving returns on a consistent basis. So in order to build a portfolio which is suiting to the needs of an investor, right? At the same time, also addressing the need of an active fund. You just buy the passive fund and you'll be happy, like a lot of people have been doing in the large cap category, because the existing funds in the category, they did not give you the reason to buy an active fund. Because if you're going to make 1% alpha and even that is not sure, what's the point, right? You'd rather be with a passive fund. So if you look at it from all these angles, we believe that the category is today, there is a need for a differentiated offering in the category. And we are bringing that differentiation to the category. And this framework is something that we might apply in the future in some other categories as well.
Nice. I have one final question, and then we will take a few questions from the audience. Atul, and this is a general question. Markets are all-time high, and
Yeah,
we all know that large caps are reasonable as compared to mid caps and small cap. And we knew this 6 months back also,
correct,
3 months back also. And
correct,
then also, small cap and mid cap has continued to do well, and people have made enough money in the last 3 months also.
correct.
My question to you is this, that anybody who will come and invest will invest for 5 years and 10 years. That is the objective, or maybe 20 years. Just because markets have run up and large caps are reasonable today as compared to small cap and mid cap, and you are investing for 10 years perspective, why should one invest in large cap and not flexi cap or mid cap or small cap for long-term wealth creation? Number one question. And number two, because you are also, my sense is that we'll be focusing on probably the lower end of the index to identify those 25 stocks. Maybe a major composition of those 25 will be from the bottom half of the index, which also tells me that you will be not buying the the high market cap stocks, but a low market cap within the category of large cap. If that be the case, why should one invest at this point of time in a large cap fund?
Sure, sure. So basically, let me answer the second question first. So if you look at the top quartile performers within the large cap space, and we did this study for the last many years, we observed that uh, if you look at the top quartile winners, it is not that all the winners are coming from the beyond 50, right? 60% of the winners are coming from beyond 50, but 40% of the winners are coming from top 50, right? So it is not to say that just the beyond 50 is doing better than the top 50. That is not true to some extent, like because every company is different, every unique company is unique, right? So from that perspective, it is not that we will be investing only in the beyond 50 companies, because a large company becomes large based on the opportunity that it caters to. TCS was a 50,000 crore market cap company when its IPO came in 2003, 2004. It was the largest company then in terms of technology. It is the largest company in 20 years after that, right? But the stock is up 30 times in the last 20 years of its IPO. TCS coincidentally was my first IPO in my life, right? 30 times on price return basis. And there have been multiple dividends and buybacks that have also happened in the last 20 years, right? So we have one perspective here. So if you look at it this way, if you look at the global list of large companies, right? The global large caps of top 100 companies, there are three Indian companies, which are the global large cap companies: Reliance, TCS, and HDFC Bank. If you look at the next slide, you find that our largest company has a 55 rank globally, right? And our smallest large cap company has a global market cap rank of 2,140, right? So basically, Indian large caps are mid and small caps in a global context, right? Today, the opportunity is global. Indian market, Indian GDP is 4 trillion, but the global GDP is 120 trillion, right? So businesses will work out of India to cater to these global opportunities. So a company which is large doesn't mean that it will not grow, right? It depends individually on that company. If the company has the mindset, it has a growth mindset, it has the management team to execute that growth mindset, and it has good capital efficiency and in terms of entrepreneurial approach, you will see that they will do well. Look at the evolution of Reliance Industries. They were a textile trader. From there they evolved to be a textile manufacturer, and then oil and gas, then retailing, then telecom. Now they're talking about green hydrogen. So look at the evolution, right? So a large company continues to become large if they are enterprising and cater to multiple business opportunities in the years to come. So we do not believe that just because the company is large today, it means that basically they can't grow further. That's not true. If you look at the last 20 years of data, you see that large cap index itself has given you 17.5% CAGR. It is up 29x on a total return basis. This is not like 8% return. This is very reasonable return, right? So another perspective is, if you're a long-term investor in large caps, you beat fixed income hands down, right? You're investing in the company which derives 35% of GDP, 65% of India's revenue on the listed company side, 75% of India's profit on listed company side. And if you look at this performance, you'll see that on a road return basis, on 5 years, 7 years, 10 years, large cap have beaten fixed income almost all the time. And if you look at this, you'll see that 17.5% compounding over 20 years is 29x. Regular income, fixed income in the same time is 4x when inflation is 3x, right? So your purchasing power in large cap has grown by 9x when post-tax basis, if you look at fixed income, is not even 1x, right? So if you look at it from that perspective, you will find that large caps is not that large caps do not have the potential. Large caps have a lot of potential. You need to select companies better within large caps.
Perfect. Let us see if there's some question, and why suddenly small cap to large cap NFO is one question of Sumit Sehgal. Quickly, if you want to
Very
answer.
simple, very simple. As a house, we are expanding our product bouquet, and basically, typically, what happens is in a product bouquet, SEBI allows you to have one fund in one category and so on and so forth. So for the last many years, we didn't do anything on the NFO side, and now we want to further build our mutual fund business, and that's the reason we have had multiple NFOs in a succeeding time period. So that's the thinking there.
Dilip is saying this looks like a focused fund.
It is a focused fund in number of stocks, but if you look at it from a perspective of the ACE framework that we have, it is threefold. Like you can have a focused fund which is having 30 stocks of the index, which is the Sensex index, and it will have 100% passive share and 0% active share, right? But our fund is the only similarity with the focused fund is number of stocks. But if you look at the other two, high active share and high and equal weighted portfolio, it is a completely fresh thinking, and which is unique and very different from any focus fund. And another thing is focus fund today are classified as flexi cap funds, right? This is a 100% large cap fund. So that is again a key differentiation that we need to highlight.
Fantastic. Thank you so much. I think we had these few questions. Atul, if you have any final word on this, the floor is open to you, and we wish all the success to Motilal on this NFO and as an AMC. Any final observation?
Thank you very much for your time and for this opportunity. The only thing I would like to say, I think, is connecting the dots with what you started off with. I believe in skin in the game. I put all my money in the funds that I manage.
That's very interesting. Yes.
So the only thing I would like to say is I have basically redeemed my PMS AIF investments, and I am putting my money on lump sum basis in my own fund. Right. In the future, obviously, my earnings also will be contributed to the fund because of the SEBI requirement. But even in the future, I will continue to do that. My family members have been asking me what they should do. They have been reading about Motilal Oswal large cap fund. I have told them, ये घर का mutual fund है, आप समझ के चलिए. I will be your fund manager, and I am putting my own money. So you put money as per what you think is right, lump sum, SIP, but you just understand that we will run it well. We will run it as if it's our own money. And so that is the only thing I want to add.
That's a big call, and that's very much appreciated, because having so much conviction in your fund, putting so much money of your own is a very big thing, and that will give a lot of confidence to MFDs and investors. Thank you so much, Atul.
Thank you very much. Thank you very much.
Thank you so much. Bye-bye.
Bye. Take care.
Take care.